some of the very key aspects of trading. We talk about market psychology, we talk about trading techniques, we talk about risk management, and there's a whole lot of stuff that we talk about over time. Because to become a trader, as you know, and as we mentioned last week, it's not an easy thing. And if you want to be really successful, you got to pay the price. You got to go through a process, a very specific process. You cannot skip education. And today we're going to be discussing the three crucial questions every trader must answer. Okay, so to be able to be a good trader, it's one of the things that you have to always do self-assessment. You always have to ask key questions about yourself, more important than about the assets that you are trading. Okay, because the most successful trader that you can be depends on the person that you are. And if you don't know who that person is, if you don't know the weaknesses of this person, and that's you, okay, if you don't know the weaknesses of this person, you don't know the strengths of this person, you don't know when he's emotional, when he's not emotional, if you don't know enough about you, you might get some winning trades on the market, but you won't be very successful over the long term. So this is what we are going to be focusing on today. So thank you for joining us from wherever you are. Write down in the chat section which city you are from, and we are going to be starting right now. And the three questions are actually questions that you have heard. You have been if you're trading for some time, you will have heard of these questions, but it's something that you have to ask yourself and answer honestly. There's no point knowing the questions but not taking action to answer it or to meet the requirement of the question. In the same way, it's not enough to read trading books but not actually follow it. It's not enough to have a trading plan but not actually having the discipline to follow your trading plan. So knowing these three crucial questions, is mostly, if not primarily, about being honest with yourself. When you are honest with yourself, then learning can begin, then change can begin, and that's where a new trader will come out after you do the self-assessment. So what are we talking about? What's the first question that's really important that you should know? Number one, do I have a trading strategy? I'm going to put that up on screen so that you can see it. And this is the first of three questions. Do I have a trading strategy? I hope you guys can hear me. If you can't, let me know in the chat and I'll do something to fix it. It's Monday, the first trading day of the week. And already we should be starting with honesty. We should be starting with the truth. Okay, you can't mess around with the truth in trading, because everything you see on the market, the prices, it's all about the truth. The truth is relating to facts, and some people may react on rumors, but over time the market and the assets that you are watching will react to the truth. Okay, so you have to be true to yourself also and ask yourself, do I have a trading strategy? Now, why do we have to ask these questions, this particular question about trading strategy again and again and again? Because a lot of people, they do their trading strategy halfway. They write down the steps that they're going to follow. They write down the assets they're going to trade. They write down the indicators they're going to use and what their signals would look like. But the moment they are in the market, hitting up button or down button, pressing buy buttons or sell buttons, clicking buy and sell, clicking up or down, they are really no longer following their strategy. They have a strategy, but it's not something that they follow. So when they don't follow their strategy, what are they following? They are following other people. They're looking at the prices moving up and down, and then when they see that the prices are moving up and meeting their strategies requirement, or meeting their strategies um, analysis, what is required, they find the signals that they have in their strategy, and then they look at it moving up, it fits their strategy, and they start to trade up. But the moment the asset turns direction and starts to move down, then you will think that they will stop trading, because their strategy says the signal is going up. So if it's going down, you should not be making any new trades because your strategy is saying something else, but the market is moving in a different direction, right? Wrong. What happens to a lot of people is they, they have this strategy, but they abandon them. So the moment prices move in the other direction, and then they, at the beginning, they think I can make more money opening an up trade because now the price is cheaper because the asset is moving down. So they think this is temporary. So when they think this is temporary and won't last forever, they open another trade. And then when the asset continues to go down and deny the direction that their strategy tells them, they are losing more money now because now at the beginning they have one trade, now they have two trades, losing trades. So what happens? You think they will stop? A lot of traders will not stop. Open new trades in the down direction. What are they doing there? They are definitely not following their strategy. So if you don't follow your strategy, it's like you have you don't have a trading strategy because you don't follow it. So now you are not trading on any strategy. You are just following your emotional feelings, and there's no patience, there's no discipline, and really what's happening there is a word for it. It's called FOMO, fear of missing out. You think the market is correct and your strategy is wrong, and you are following other people. And when the down direction continues to stay in that direction, you're making profit with one of your trades. You abandon your strategy and you're now starting to make profit. You open another trade because you think this is the right direction that you are seeing and you are already following it. Okay, so the second trade in the down direction is not a trade that follows strategy. It is a trade based on, it's not based on FOMO anymore. The first trade was based on FOMO. The second trade is based on greed. You want to make more money fast. Okay, your strategy didn't work, so now you're opening a second trade because the first trade tells you you're correct, so you're opening a second trade. And guess what happens when the market reverses direction and goes in the direction of your strategy? And now your two new trades are also losing money. Look at the platform now. Look at the platform now. Um, Look at the platform now. I have AUD JPY on screen. Can you see that? So if your indicator is telling you it's going up and then it suddenly goes in the other direction, and now you follow that other direction, and suddenly look, it swings all the way up, all the way up. So all your new trades, the two trades that you open in the down direction, is completely gone. So you now have not lost only two trades that were following your strategy because it went in the other direction. You then open two new trades, first based on FOMO and second based on greed. And then the market turned in the other direction. So the two trades that you didn't follow your strategy now becomes four trades. So you've lost four trades. When really what should happen is if you follow your strategy, you would lose two trades at the beginning and the market reverses direction. If your duration is not long enough, you're gonna end the two trades and lose money on them, fine. But you wouldn't open any more trades. Why? Because your strategy tells you not to open any more trades. This movement that you are seeing on the market right now is not based on your strategy. So you don't open trades. So if you didn't open new trades based on FOMO, you didn't open new trades in the other direction based on greed, you would have saved yourself and you protected your account from two trades that didn't follow your strategy, and you would have been better. Your account balance would have been protected. Okay, so that is very important. So the movement that we are seeing in AUD JPY is giving a perfect example of what happens when you don't follow your strategy or you don't have a strategy, and then you follow the market without analysis, and then if you are wrong, it would have taught you a lesson that If you follow your strategy, you would avoid more losses. Okay, so that's the key lesson you should have learned by now. And this thing about following strategy is actually pretty straightforward, and people follow their strategy more when things are working, and people tend to not follow their own strategy when things are not working. So let me say that again. People tend to not, people tend to follow their strategy when things are working and when they're making profits. When they're losing money, okay, when traders are losing money, they tend to follow, they tend to not follow their strategy and follow other people. They will do FOMO, they will do greed trade, they will do revenge trading. So all these are emotional trades. And they will do this more when they are losing money. So really, your strategy should have very specific criteria, very specific requirement. In one day, you cannot do more than three losses. If you do more than three losses, no matter what, man, stop trading. Come back again tomorrow. No matter what, man. That will protect you. That will protect your account. That will protect your balance. That will protect your psychology. Now, people, like I said, tend not to follow this their own strategy because emotion is a very strong factor in trading. When you're making decisions, you are not thinking with your head, you are thinking with your emotion as well. Because emotional pressure that comes from you wanting to not lose money, wanting to make back the profit you lost, wanting to make back the account balance that you lost is a very big thing. And when people have trading strategies that they read and they research and they learn through the hard way, they trade in their demo account and they know it's very hard to win. And the moment they have a strategy that appears to be working, and then they shift to the live account and now start to trade real money, starting to get real profits and also making real losses, very quickly they forget all the time that they have spent, all the hard, difficult period that they have gone through learning about what works, what doesn't work. They completely forget about that, and then they follow their emotion. Why? Because following emotion is easy. You don't have to do any analysis. You don't have to do any analysis. You don't have to do any thinking. You don't have to do any. Nobody's going to tell you something that you don't want to hear. Because when you're trading with emotion, you are only doing what you feel you want to do. That's the danger. That's the danger. All traders who have lost money will tell you, don't follow your emotions. It will destroy you. Okay. So that's the first thing. The first question that you need to ask, do I have a trading strategy? It's actually a trick question because if you have a strategy, then the next question is, do you follow it? You must follow it. Now, if you have difficulty following your trading strategy, do what I just suggested. Put a hard limit on the number of losses you make in one day. So tell yourself, as an example, it depends on you, it depends on the size of your trading account, it depends on how much money you have to trade. But a good starting point is tell yourself, if I make three losses today, I'm going to stop when things don't work. It's fair. Even the professionals, their strategy don't work every day all the time. They don't work every day all the time. Even the professionals lose money. So it's only fair you have the same expectation. Some days your strategy is going to give you lots of profits. Excellent. Some days it's going to make you lose money. That's okay. Stay away from the market if the strategy cannot give you profits on that day. So tell yourself maybe three trades, you lose three trades, you are out for the day. Come back tomorrow, come back next week, up to you. Okay? So do that. Hey Shiva, I'm seeing your chat. How are you? Where you're from? Let me know in the chat. I'm guessing you are from India. I am happy to see you. Thank you for joining us. Yep. Okay, so let's look at the second question. Crucial question every trader must answer, should answer. Okay. Do I have the right psychology for trading? Do I have the right psychology for trading? So, what is this? First, we talk about strategy. Now, we're talking about psychology. We just talked about how market movements can invite you to do things you don't want to do. Okay. We just talked about that. And we also talk about the importance of you having specific hard limits. Losses for the day, you got to stop if you reach the limits on your losses for the day. If you say I'm going to quit at 5 losses, after you make 5 losses, you stop trading for that day. You want to protect your account balance. This is important. This is key to winning at trading in the long run. Okay, you don't win trading in one day, you win trading over a few months. You have to have consistency. That's how you become a trader who wins. Okay. A trader who doesn't win is a trader who wins in one day and then loses every other day. You don't want to be a trader who wins only a few days in a year. You want to be a trader who wins month after month after month. Every month, your starting balance and your starting of the month balance and the end of the month balance need to be growing. Okay, Shiva from Rajasthan. Cool, man. Thank you for joining us. So I hope you're getting value from this. Okay, we're just talking about the three questions every trader should answer, and this is all about honesty because honesty is how you deal with problems that are within you, that is inside of you, and really the progress you need to make as a trader is when you fix yourself, not fix the market, not fix your assets, not fix your indicator, fixing yourself. So this is very important. So the three questions. The first question is, do I have a trading strategy? And the second question, do I have the right psychology for trading? The right psychology for trading. Let me just put that up on the screen so that all of you can see it. That's the second question. Do I have right psychology for trading? Yep, that's the second question. Okay. All right. So the market can be really wild and the market can be really quiet. Okay, when do you think this happens? When news comes out, the markets become really wild, and when the markets are waiting for news and not sure what the news is going to be, then the market can be really quiet and it can be really sideways. Okay, so forget about forget about strategy for a while. The psychology here is really thinking about how confident you are and how aware you are of your biases. We have biases, we have things that we like to do. So when you want to master your psychology, when you want to know the answer to the question, do I have the right psychology for trading? You need to know what you like and what you don't like. You need to know what you love and what you hate. So, as an example, I trade Aussie USD a lot, okay, AUD USD a lot, and I also from time to time try and trade GBP JPY. Okay, why? Because I like the chart. Whenever GBP JPY moves, it's very interesting. It's so powerful. Whenever it's going up, whenever it's going down. Right now, I think it's on an uptrend long term. Um, because the yen has just been weakening, again and again and again. Let me see if I have that. I have AUD JPY. I don't have GBP JPY to show you at the moment. Okay, but anyway, um, but in terms of the two, AUD USD and GBP JPY, if I look at my trading history, I will see that I make so
No, the losses I make are so huge. In total, the losses are so huge and so frequent when I trade GBP JPY. But when I trade AUD USD, I'm consistent. The gains are small, the profits I make are small, but my win rate is really high with AUD USD. You know, if I make 10 trades, I can probably make 7 or 8 wins out of 10 trades. AUD USD. But not GBP JPY. As much as I like the asset, as much as I follow it, I watch it every day. I watch it in the Asian session, I watch it in the London session, I watch it in the New York session. And sometimes my analysis on paper before I open a trade is accurate with GBP JPY, similar to AUD USD. The trends are not the same, but my analysis works on GBP JPY on paper. But I find that when I open trades, that's when I start to lose money. That's when things start to go wrong. And ask I ask myself the question, do I have the right psychology for trading? In this case, for trading GBP JPY, actually no. I don't have the right psychology. Why? I tell you why. Because if I look at my trading history, I've lost so much money. My win rate is really low, 10, 20%. If I make 10 trades, I'm going to win only one or two trades, and I'm going to lose 8 trades. That's my trading history telling me the facts. But me, when I'm watching the market and I've opened my AUD USD trades, and then I go and switch over to GBP JPY, and like I told you, I like GBP JPY because I like the movement, I like the patterns, and I open trades on GBP JPY because I like. You see, I like it. Now, and when I say I like it, there are times when my strategy tells me there is a signal to open a trade on GBP JPY. But there is also the other side of my strategy, which is if your trading history tells you you lose money on this particular asset, in my case GBP JPY, you should you should learn from that. So the times when I make mistakes, when I lose a lot of money with GBP JPY, I did not have the right psychology for trading that particular asset. So you should do the same. You know, find out, is there anything that makes you do things that you like, or avoid things that you hate. You know. So for me, I really like GBP JPY. I think I mastered the trend. I know where it's going, but I get it wrong almost all the time. Maybe the trade duration is not long enough, or maybe it's too short. But my trading history tells me it doesn't work for me, even if I'm using the same strategy as with my other favorite asset, which is AUD USD. So when I get signal like that from my trading history, so the strategy is important. Yes, it's telling me things. It's telling me to open trade or close trades, or don't open any more trades. But my trading history, if I ignore it, then my psychology is what makes me trade. So if you don't control your psychology, then your strategy cannot help you. Okay. Similarly, if you open a trade and it's winning, you know, and you start to stack orders, you start to scale in and open more trades on that particular asset. So let's say you like GBP USD. Let's say you like GBP USD. Your strategy tells you it's working, it's going, it's starting to go down. Okay. So your strategy tells you the signal is there, you can open a down trade. So you open a down trade. And then in the next couple of minutes, you see that the asset is still not going up and it's still pushing down. Now, at that point, your strategy might allow you to open new orders, to stack new orders on the same asset for as long as the signal is still valid. But you also have to pay attention to your trading history. Look at the number of times you have scaled in by adding new positions in the same asset in the same direction following your strategy. Did those trades, multiple trades, give you more profits or more losses? Ask yourself that question, because the answer to that question will tell you if you have the right psychology for trading. Because psychology, really what it is all about is controlling yourself, even when things are working. You know, you need to control yourself when things are working, and you need to control yourself when things are not working. You know, the other day I went on social media and somebody said, you know, traders are most vulnerable to making their worst mistakes when they are winning. And I think that is true. That is why I have a problem with GBP JPY, because the same strategy, the same analysis is working for me in AUD USD, that I'm using it for GBP JPY just like that. And it's, if I know my trading strategy, if I know my trading history, I don't know that my weakness is my psychology. So look at your trading history. It will tell you your behavior in the past and whether that behavior is giving you more profits or more losses. Go and do that. Okay, go and do that. That's one way for you to look if you have the right trading psychology. Hey Shiva, yeah, you are at a loss. What assets are you trading? We get into losses sometimes, and that's okay. We learn from it. What's important, Shiva, when you are making losses is to make sure that you don't open trade bigger size trades after that. You know, if you're making losses, you either should stop or you should make your trades smaller. Why? Because if things continue to become losing trades, you don't want to lose so much money. You can come back tomorrow and the market will be different, and you can start to trade tomorrow or some other day next week, and maybe you'll get more profits. Now, if you're not sure if your strategy can give you profits, then what you really need to do is not to trade live markets again. Go back to demo account and trade there. So trade it for 1 week, trade it for 2 weeks. If you get profits consistently on the demo account, then you can go back and trade on the live account. Yeah, that's what I will do. So I hope that is useful for you, Shiva. So yeah, that's that's the second question. Do I have the right psychology for trading? Now, this question is also important because nobody else can tell you if you have the right strategy. Nobody else. Why? Because only you have access to your trading results. So you have to be honest and look at the results. Is the account balance today is 1st of April? At the end of this month, 30th of April, look at your trading account balance. So today's account balance, write it down on a piece of paper or in your notepad. And then at the end of the month, write down the balance again on that same piece of paper or on your notepad. Compare. Is the account balance increasing or is the account balance decreasing? Now, if it's decreasing, you got work to do. Maybe the problem is your strategy, maybe the problem is your psychology. Look at your trades, look at your trading history. Are you making mistakes, or are you making losses on new trades, or are you making losses on the same trades? So if it's the same trade, then maybe you need a different strategy for that asset or that particular technique, or maybe you need to think about moving on to different assets. See if the issue or the problem is whether it's your strategy or whether it's your psychology. Okay, sometimes our strategy is correct and it's working. It's us. We cannot control ourselves. We make more trades than we need to make. Remember, every trade is risk. Okay, so if you open a $1 trade, you are risking $1 because when you lose the whole thing. Now, if you open $5 trades, don't think about the profit. Think about the risk. Your risk is $5. Okay, because if you lose that trade, you're losing $5. So define every trade from a risk standpoint, and then that will make you behave differently, hopefully, because that's how I see myself. I ask myself the question, do I have the right psychology? If I have lost so much money today, why am I still trading? Why am I still trying to force the market to give me something back. If it's not working for one day, forget about the one day. Come back some other day. Come back tomorrow, come back the day after tomorrow, come back the end of the week, or come back next week. You don't have to make mistakes. You don't have to make more mistakes. If things are not working, then things are not working. Don't force it. You can't force the market to follow you. Yeah. So having the right psychology for trading is important, because if you have the right psychology, you can control yourself. Remember that. Now, let's move on to the final question we have for today. Do I understand the market I'm trading? I'm going to put that up on screen so you guys can see it. Do I understand the market I'm trading? Now, this looks like fundamental analysis, and it is fundamental analysis. Okay. You cannot escape fundamental analysis. As much as I love to read charts, as much as we all love to read charts because it's quicker, yes, I enjoy it. It's quicker. These assets, all of them, are affected by news. Now, I'm not a fundamental analyst or fundamental trader. No, I'm very pure, reading charts and using indicators and using trends and using patterns. But some news events, some economic events, some news items are so huge, you need to be away from the market if you're not sure what's going on, or if you're sure what's going on, you need to be in the market with specific risk in the market. Not bet the whole thing. Don't bet the whole thing. Never bet the whole thing. You lose everything. Losing everything is not being a good trader. Losing everything means you are somebody who don't have the right psychology and don't have a strategy. You know, if you're betting everything on one trade, you don't have a strategy. If you have a strategy, the strategy is really bad, and you definitely don't have the psychology for trading. Okay, it's really important. Now, do I understand the market I'm trading? To do that, to understand the market you're trading, you need to look at economic events, the high key events in the market. So on the platform, you can see this as well. You can go to there. You can go to calendar, and then you can see all the news items that's coming out. Okay, so these are important news events. I can filter by importance, so I can see the whole thing, important as well as not important. And you can see that some news events are tagged as important. So those events, you need to make sure that you understand what's happening. So how do you understand what's happening? You can read the news events and see what the expectation is. And then you can look at the historical data, whether the historical data is showing economic strength or whether it's showing economic weakness. Okay, so for the data that you see on screen, this is ISM manufacturing PMI for the month of March, for last month. United States, US economy is the biggest economy in the world. US and China are the number one and number two economy, biggest economy in the world. Now, you have to know what the expectation is. So the expectation is the forecast number right here, 48.4. 48, anything below for PMI, manufacturing PMI, services PMI, they're both the same in terms of how you read the number. Now, manufacturing PMI is talking about manufacturing strength. So when the number forecasted is 48.4, it's below 50. Below 50 means that that side of the economy, the manufacturing side of the US economy, is shrinking. It's shrinking. It's not expanding. It's shrinking. It's becoming smaller. Now, how many times, how many months has this number been reported below 50? Because if it's always been reported below 50, then the second question is it going up? Is it heading towards 50? So maybe the last couple of months, the reading is something like 45, 46, 47, and now 48. Next month maybe 49. So if that is the expectation, and if the actual numbers when it comes out, you can look at the month before it to see the February numbers for manufacturing PMI. If the actual numbers are beating the forecast numbers, if the actual numbers are meeting forecast numbers, and the forecast numbers is continuously or steadily increasing, then you know that the US economy is steadily becoming stronger. Now, if it is steadily becoming stronger, when you look at US assets, related assets that are related to the US dollar, like GBP USD, Euro USD, AUD USD, you need to have the expectation that these currencies will weaken over time. Why? Because the US economy is showing strength over time. And when that happens, the dollar will tend to be stronger, rising, because if the economy is getting stronger and stronger and stronger, that means interest rates will not be cut. They will keep interest rates at a high level, or if it's not at a high level, they will announce interest rate hikes. Okay, they will raise interest rates. That means interest rates will go up. And if it goes up, the dollar will win. So GBP USD will go, sorry, yeah. So for GBP USD, it will go down because of dollar strength. Okay, dollar becomes stronger, that means British pound is going to go down. If it's AUD USD, that means the Aussie dollar is going to go down, because when dollar becomes stronger because of US economy getting stronger, then Aussie dollar will go down. Okay, same thing with Euro USD. It will go down if the dollar is showing strength. Now, if the opposite happens, you look at the last couple of months, manufacturing PMI, you have the forecast number, look at the actual number. If the actual number is struggling to meet forecast numbers, or just meet the forecast numbers, that tells you that the US economy is fragile, or it is not getting stronger. Maybe it's weakening. Now, when that happens, then you will get assets that are linked to the dollar starting to show strength. So GBP USD now will go up, okay, because the dollar becomes weaker when these numbers are showing continued issues with manufacturing PMI. Okay, if PMI is struggling to reach 50 and might even go down, then the dollar will weaken, and then there will be expectation that the US Federal Reserve will cut interest rates, and when it cut interest rates, dollar will go down, and then Aussie dollar or AUD USD will go up, GBP USD will go up, Euro USD will go up. Now, there is another aspect to it, and that is it also depends on the UK economy. If it's GBP USD we're talking about, it also depends on Australia economy if we're talking about AUD USD. But immediately when this news comes out, they will react only based on the dollar news, not on the UK news or not on the Aussie news. They will react on the dollar news, on the US economy news. Why? Because traders are short-term oriented. They are all a bunch of emotional people. Now make sure we don't join them and become emotional people. We become very strict with our trading strategy. We become very disciplined because we want to win. And if you want to win, you will pay attention to your account balance. You won't take risk unnecessarily. You will take risk only when it fits your strategy, only when your psychology tells you that you are in control and not your emotions. Okay, so that's what I have for you today. So the third question is important. Do I understand what's the market that I'm trading? You have to read some fundamental news because it works. If you don't believe me, try and trade something on the first Friday of every month. That's when the NFP, non-farm payroll, is going to come out. So dollar assets will be affected. So this Friday we're going to get NFP, I think. I'm sure of it because it's Friday, the first Friday for April. So watch out, first Friday, April. For this week, watch for the NFP news and watch your favorite assets. You can open some demo account trades and see how easy it is to make money or how difficult it is. Now, if it's difficult, that's okay. If you control your psychology, you're not going to lose money. You're going to be okay. You can come back tomorrow. You can come back on Monday and then trade when you are more confident and when the market follows your when you are in control of your psychology and you only open trades that meet your trading indicator analysis and strategy. Okay, so I hope that has been useful. If you like this video, subscribe to the channel if you haven't. Give us a like, share this video with your friends, trader friends. Okay, we have a promo running, and all of that information is in the description, so don't miss your chance to use that promo. um, Go into the description to get the promo code. Okay, so I will see you next time, guys. Don't forget, I will be here every week. So to improve on your trading, be sure to join me in our next live stream.